This Undictated podcast is brought to you by Futuregrowth Asset Management. And with us today, Jason Lightfoot from Futuregrowth. Last week, Jason, on the 1st of July anyway, the Infrastructure Act came into being. How long has this been in gestation?
For quite a while now, probably the last 2 or 3 years at least now, it's been thought of and been put through the various processes.
And what's the whole purpose behind it?
Well, our idea is primarily to facilitate and prioritize infrastructure development within South Africa. And what it does is it refers to the National Infrastructure Plan, which was put into place a couple of years ago. And what it does is it looks at various strategic integrated projects that will look at things like energy, municipal infrastructure, rail and road, and transport corridors. And what it does, it actually creates the right structures and focus and to try to streamline the process around infrastructure development by referring and placing a lot of emphasis on the Presidential Infrastructure Coordinating Committee.
Yeah, because that's been around a while, but it doesn't seem to be able to get any traction. Is this going to give it?
Well, that's the whole idea behind it, that it puts the right structures in place to align and gives the right powers to the PICC.
Who's on the PICC, apart from clearly Zuma himself?
Well, it's Zuma and it's various presidential committees and such, so he probably has sole powers to bring the right presidential substructures in place, the right parties who have relevant experience in various areas. So it might change from time to time. It just depends on who the right guys are needed at any point in time.
And why do they need an act to make this work?
Yeah, I think an act gives power to something like this, so it actually just creates the right forum to address the massive backlog that we have in the country. Obviously, if things are signed into law, it actually just brings a greater level of importance to it.
I suppose the two big issues that, apart from actual delivery, and we can talk about that in a moment, but the two big issues that they need to look at is the corruption, because we've had a whole competition commission looking into that, and land expropriation. Let's start off with corruption. Is there anything in the Act that will directly address that?
Yeah, there are structures that are put into place in the Act where it refers to that they can't obviously then. Obviously, when these things go out to tender, that they can't necessarily give it to a potential linked party as such. So there are look-throughs into the Act in terms of if there is a plan put into place and the tender that gets executed, that they can't necessarily make all connected member in that regard.
And
there are protections in place to cover that.
Are politicians generally excluded?
Pretty much, yes.
All
politicians
right.
And their immediate families, yeah.
Well, that's a step certainly in the right direction. And expropriation, because, for instance, it's quite interesting up here on the Highveld. We've been looking at the plans for Gautrain, but that would include quite a lot of required expropriation. Is there anything in the Act about that?
It does refer to it, yes. So they do have some level of power in it, but ultimately it refers back to the Expropriation Act, where there have been structures put in place in regards to that. So they can't obviously just go out and expropriate land per se. It has to obviously refer back to the steps that have been put in place in respect of that Act itself.
So from an investor's perspective, does this finally mean that the infrastructure boom that we've been promised will arrive?
Hopefully. I mean, the government's achieved quite a lot in the last 20 years, but, is it nearly enough? Still economic growth is still a massive concern, and I think right now that we need a lot of focus in place on infrastructure, which will drive job creation and economic growth. I think for investors, there's been very good examples of policy. The renewable energy program has been a fantastic program that was put into place, which drove investments in that area. Hopefully, this will put great additional models that they can rely on that can potentially drive investments in this area.
Because the construction group's share prices have done very little in the last year or so. Would you see the promulgation of this Act as a trigger to reassess that?
It's likely that it will drive the share prices, obviously, if they win contracts on the basis of this infrastructure drive. But the whole idea is government going to be able to execute on this whole plan? The main idea is, or the main concern is, sure, you might have good policy in place, but ideally, can they execute on those desired results?
And stepping back a little and giving us some of your thoughts, your opinion, do you think they can?
Yeah, I think so. I mean, again, I refer back to the Renewable Energy Program. That was just a fantastic program that's been put into place, and if they can emulate that across various different infrastructure nodes, I think it could possibly work.
Why did that work, and what we've had on infrastructure so far not work?
I think they had the right team in place, they had the right focus, which just drove the energy behind it. And I think, given the dire need of energy in this country, that obviously was another driving issue for that.
Yeah, and the construction companies themselves also got pretty involved in that. Again, from a broader perspective, we do have a plan in South Africa which appears to have been built on the Chinese plan. First we build a road, then economic growth follows. Can you translate it? And they're obviously very different countries with very different challenges, but do you think you can translate that plan into South Africa and kickstart this economy?
Yeah, I think so. I mean, obviously one of the key concerns in South Africa is job growth and lack of jobs in South Africa. So I think as a start, that'll be a good implementer to drive that process and take it forward, and potentially, result in potential foreign direct investment in South Africa.
Because that's clearly we need to do something to get this economy going.
Correct.
All right, you haven't told me whether I can go and buy construction shares yet. Can I just buy the index? Is this significant enough to maybe refocus one's mind there?
Yeah, my background is I'm primarily a bond guy, so I play in the debt space. But yeah, potentially somewhere down the road there might be opportunities to relook at that sector.
All right, and from the bond perspective, is there any debt that's now becoming more attractive as a consequence of this new act?
I mean, I play in the infrastructure space, and I look after the Futuregrowth Infrastructure Development Bond Fund, which is primarily a fund that focuses on developmental type assets, infrastructure type assets. So hopefully this will result in a greater array of assets that one would be able to choose from in the future. Deal flow is quite of a concern at the moment, but this will potentially drive additional deal flow for the market.
How has deal flow contracted then over the past few years?
I mean, renewable energy is, again, referring back to that, it's been a great addition to deal flow in the market, but primarily the typical bond investor primarily plays on the listed market where they buy your traditional Eskom, Telkom, Transnet bonds, whereas we're quite focused on the unlisted space where we obviously partner with banks and other intermediaries to try to get additional inflow or different diversity in our funds in this particular sector.
The World Bank and the IFC, do they play a big part there?
So the development finance institutions do play a role, and they have funded quite a few of the transactions in the space, so there definitely is a opportunity for them to provide some funding, yes.
I know it's a little outside of your direct area, but what about ABLE? Have you been watching the performance of those bonds, given all the turbulence that's been going around that company?
Yeah, I mean, the bonds really haven't done too much. I mean, obviously we saw international bonds widen slightly, so I think it's just a wait and see game.
Is that because in the bond market you play in big numbers? So I suppose if something does go sour, as we saw with the whole First Strat nonsense, it can give you a big hit. Does that make your risk assessment a lot more focused?
Yeah, I mean, obviously one needs to assess each counterparty on its own basis and its own risk parameters. So, sure, I mean, we haven't really had any defaults in the market since the First Strat transaction. So I think people will just continue to assess the risk and see what happens.
And as far as the downgrading by the rating agencies is concerned, has that had a knock-on effect?
Yeah, as I said, local spreads hasn't really widened. Obviously, the effect it's all been on the international spreads.
Jason Lightfoot is with Futuregrowth, and this undictated special podcast was brought to you by Futuregrowth Asset Management.